Welcome back to Midcap Masala right here on ET Now. And now let's talk about Lemon Tree because with the restructuring, the company has been in focus. But what are the plans going ahead? Let's deep dive more into that. And let me welcome Mr. Patanjali G. Keswani, who's the Chairman and Managing Director of Lemon Tree Hotels, joining us on the show. A very good morning and thank you so much for your time. And this demerger, that is indeed transformational move. But help us and with more understanding behind the rationale, why this demerger coming at this particular time, and is this a right time? Why do you think so? As well as, will Flur look beyond Lemon Tree assets and actively acquire the third-party hotels, or will it remain largely a captive ownership platform?
Flur and Lemon Tree had reached a point when we needed to separate them with separate governance, separate management, because the risk return profiles, the way they would grow should not have been interlinked anymore. So it's very natural. Many years ago, Marriott did that and created Host Marriott, which is now Host. Multiple large companies who've created assets have ultimately spun them off so that investors then have a choice as to whether they want to be in the asset heavy side, which is typically like pension funds and institutions, or do they want to be in the high growth brand side? And we did that. So we achieved multiple objectives. We got APG an exit. At this point in India's economy, which is super exciting, which is, I think, when consumption in India is finally poised to take off, and the number of households who will get into discretionary consumption, if I make a guess, in the next 5 years will grow 5x. That will, of course, include branded hotels. So it's the perfect time for Lemon Tree to focus on the asset-light, high-growth, high-velocity business, for Flur to raise capital with APG. It itself, by the way, has substantial free cash flows in the hundreds of crores every year. So I wouldn't be surprised that if in the next 5 years or 7 years, Flur deploys $700-800 million or even $1 billion to buy, lease, or build assets. And Lemon Tree, of course, would like to manage it, but that's not necessary. Flur is an independent operator and could have other brands also, whichever give them the best return.
Okay, and Mr. Keswani, hi, morning. Just talk to us about the contours of this deal. The deal as of now does not throw any light on what the share swap ratio is going to be. Now, from an investor's lens, how should one think about valuing Lemon Tree versus Flur after the demerger, and what's the right way to look at multiples for an asset-light manager that's going to be Lemon Tree versus an asset-heavy owner that's going to become Flur after the demerger?
So asset companies typically, I'll come to the swap ratio later, but asset companies typically are valued, at anywhere from 15 to 25 times EBITDA. The difference between this number is it depends on how much you have in the pipeline for future asset creation. So companies which have a big pipeline of future assets, the markets give an implied growth premium to. And therefore, their multiple on current EBITDA and value terms could be 20-25. However, if you have nothing in your pipeline or you're not growing very much, then you will have a multiple on your current EBITDA of 15 to 20 times. So that's asset. Management fee income based on the rate at which you are growing this business and the fact that it is so attractive because it is high speed, high growth, and asset light, risk light, other than, of course, reputation. It's typically valued at 30 to 40 to 50 times EBITDA. Because suppose you have, you're managing 10,000 rooms, but you have 20,000 rooms in your pipeline. That is also, after a certain level of discounting, brought into the valuation of the company. Now let's come to Lemon Tree and Flur. Lemon Tree owned nearly 2,000 rooms, including some hotels under construction. Flur owned 4,000 rooms. So Lemon Tree owned 60% of Flur and 100% of its own hotels. So when we put it together, really Lemon Tree owned about 75% of the merged entity. So what did we do? Warburg is buying about 26%. Lemon Tree is retaining 41% and distributing 33% of that enlarged entity to Lemon Tree shareholders.
All right, but along with that, since the shareholders will own Fleur both directly and indirectly through Lemon Tree, is there a risk of a holding company discount, and how do you ensure value isn't lost in the structure?
So what we did is our transaction advisor and banker, Morgan Stanley, did a full assessment with our finance teams and with with me and our leadership, and we said, what are we transferring to directly to Lemon Tree shareholders in Fleur? What are we retaining? What is going to be visible now is the very significant fees that we earn, which were not visible earlier because we were consolidating it, because we owned a majority of Fleur. So, what is the likely valuation of Lemon Tree going to be? Plus the one-third shares in Fleur that we give to Lemon Tree shareholders. And in every single case, it was very, very accretive to Lemon Tree shareholders. So besides the fact that we've split the group into two companies with different risk return and investor profiles, it is also very accretive to Lemon Tree shareholders. In fact, now what happens is Lemon Tree becomes debt free. Lemon Tree will have a lot of cash generation every year because it's not required to invest any capital. So Lemon Tree will become a dividend paying company. Fleur will, of course, also pay dividends, but also be a growth company because it will deploy capital, whether it's its own cash flow or with Warburg Pincus, with very risk-adjusted leverage, and it will keep growing on the asset side, which beautifully enough will flow into fee income for Lemon Tree too. So all in all, it is very accretive to Lemon Tree shareholders, and I think once we list Fleur, it will become very evident and visible.
Okay, and Mr. Keswani, talk to us as assets move from Lemon Tree to Fleur. How seamless will the transition be from an operational as well as a cash flow perspective?
Completely seamless. It's a scheme of arrangement of demerger. So what happens really is Lemon Tree's assets move to Fleur. The management is the same, which is Lemon Tree management. We will continue to manage it. Of course, the employees of those assets will now be employees of Fleur, uh, which we transfer. Lemon Tree will become the manager slash brand owner, and there will be, I think, zero disruption in any form.
But also help us understand how independent will the two entities be in terms of capital allocation and strategy once Fleur is listed?
That is right, but obviously, Lemon Tree operating in 80 cities, expanding to another 40, will have a lot of knowledge about what's happening in markets in India. And I would expect, since I'm also the executive chairman of Lemon Tree, I would expect that there will be some transfer of that insight to Fleur as to saying, listen, there are some good opportunities in these cities or in these towns, and then Fleur and its board will decide whether they want to invest. The clear understanding is Lemon Tree will not invest in any of these assets. However, if Fleur decides they do not want to invest for any specific reason, then I would not be surprised. I would expect that Lemon Tree would be able to then go to some third party investor and say, would you like to invest in this asset, in the creation of this asset? Let's take an example. There's Ravi Jaipuria of Arun Beverages. He has signed two deals with us in Ayodhya and Guwahati for 650 rooms. He's a 50-50 partner now with Fleur in Shillong for an Orica of 160 rooms. So, there is an interesting opportunity, and perhaps if Fleur, for whatever reason, says they're not interested, then certainly Lemon Tree has the right then to go and ask Ravi that would you like to take this, or anybody else who's part of our larger universe of potential investors. But Lemon Tree will not invest.
Okay, and lastly, Mr. Keswani, post listing, could we see further stake changes in Fleur, either Warburg increasing its ownership, or is Lemon Tree, is that window open for Lemon Tree to monetize part of its existing holding?
Warburg's commitment of up to nearly 1,000 crores is pre-listing. We plan to list in 12 to 15 months. So what does it mean? And Fleur itself will generate a few hundred crores of cash in the next 12 to 15 months. It means really we will take Warburg's money if there are to really deploy it to grow very rapidly in Fleur. But it is very clear to us that post-listing, at least as far as I know, Warburg is not going to invest more money. The investment that Warburg makes is pre-listing. Whatever the shareholding is pre-listing will probably be the final shareholding, and then post-listing, if we need money, we will all get diluted if we raise capital from public markets through QIPs and so on and so forth. So, short answer, I don't expect Warburg to invest anything beyond the 960 crores. I'm not sure we will deploy the full 960 crores, but there will be that level of dilution. Then we will go for a listing, after which we will raise money from other institutional investors, hopefully at a big premium.
Okay, Mr. Keswani, that puts a lot into perspective. Thank you so much for your time today and really appreciate you joining us and taking the time out to explain this demerger to us. So yes, big news for Lemon Tree, and there you have the entire breakdown of what the demerger of Flur is going to look like. But on that note, viewers, we're completely timed out on this edition of Midcap Masala. Thanks so much for tuning in, but stay on because Buy Now Sell Now takes all the action ahead.